Good evening, this is Nick Inman from VolumeProfileCharter.com on Saturday, April 7th, and this video is not going to be too different than Thursday nights only because the market was closed on Friday, but there was a big reaction to the jobs report. The jobs report came in much lower than expected, and the market sold off almost an immediate 1%, and so Sunday, when the futures opens, it's probably, just expect Monday to be a pretty ugly day. It could be a buying opportunity. Actually, I suspect it will be some type of buying opportunity, but at the same time, have your expectations in line. And right now you can see the S&P is right at the 50-day moving average, which is still trending up. We're still in an uptrend, but we've broken support, which was, if you remember, the 1886 level or so, 85 level. And let me just bring up the monthly chart. Okay. This 1885, let's call it, you can see the bottom of this very big high volume area. That happens to be to hold the point of control for the last 30 days. So what you see is a very good bracket. We broke out twice, and both times we broke out, we sold back off to the bottom of the channel immediately. There was no real high or low that developed from either of those. It was just every time there was strength, it was being sold into. Now we went from coming back into that bracket and bouncing. 3 times did we bounce from the bottom of that range, except for the third bounce ended up being a major lower high and a rollover after the jobs number. So what you're looking for now is you look down to the next high volume area and see what's going on as far as potential support resistance. Okay, I zoomed out one so we can see. So basically you see our double top, and we're failing from those levels, and now I'm on a 90-day chart and we're still at the point of control. So that shows us that this is a little bit top heavy, just like it happens on a daily chart, like an intraday daily. Here's an example. Point of control at the top end of the range, and that was pretty much the high. That range was the high. We tested it, failed. We had another situation where the intraday point of control was at the top. What did we do? Sell off. The test back of that general range, sell off, and then we got some sideways consolidation, which fell out the deep end. So you can, if you understand the point of control volume profile, you study it. One thing you'll recognize is when a point of control is at a particular range, you're going to get some type of range extension from that particular range. And any given day, it's that miniature high volume area that should be between, say, 3 to 5 S&P points. And when you go to a week's consolidation, maybe it's 5 to 8 S&P points, and then you go to a month's and maybe it's 8 to 10 or something like that. And the point is, you will understand that those ranges matter the most in that particular time frame. So what you're looking for is a trade off of those levels, and you want to see that develop. You want to go with it, not against it, because the move tends to work once it breaks out, and it tends to be a good one. Now here, these breakouts, which ended up being fake outs, what happened? Like, as far as think to yourself, why didn't it continue higher? Well, buyers ran out. There were no more buyers. The sellers overpowered it, and we pushed lower. So we did that twice, came to the bottom of the channel, and now when you risk going to the bottom of the channel, your expectations has to be a retest of these two highs. And the reason why is because if we get some type of lower high where it fails and rolls over, the sellers are going to see that, or I should say the market players, and they're going to panic from their longs if they're long, and they're going to ditch them. And whereas the shorts, they're going to press their shorts pretty much and try to break this range to the downside. So as we're doing that, we look for the next levels lower, and you can see back in the beginning of March, The high was 1376, and then really 1370, let's call it 1375 just because it's the top of this high volume area. 1375, it was the top for 2 times tested. We made a big move lower and then a complete reversal up until we traded straight back up to 1375, where it then broke out again and then didn't come back to test it until now. So this level is important. This level matters. What else is important? Look at the bottom of this high volume area in March at 1360. I'll zoom in so you can see. The market pressed higher, and our first real consolidation for a longer period of time without making new highs was right here in this range. But where was the low? The low was at this 1360 level, the bottom of this high volume. So in my perception, that level matters too. So what I'll do is I'll mark it off. And that is our high volume area. That's our downside target for the market. Now you can see it's already starting to bounce. We've had a little bit of stopping. It sliced through this light volume, and it's going to find value, and value is going to be where volume is. Where's volume? Well, it's this 1376. Let's call it 1375 to 1360 range. Now you need to put an emphasis on 1369 to 1366, and the reason why is because it was the value area high, 1366, for February, and it was the value area low for March. So that level is very important, and then from there you have to take into account this high volume that's definitely higher than any other bar except for this high volume area which we're breaking down from. So this 1369, 1365 or so, that's your pivot within this 1375 to 1360 range. If we break that, then it's simply down to this 1340 level. Let's call it 1350 to 1340. You can see the volume here. It was also what we're going with is the point of control for February, and that's kind of our line in the sand. And from there, you would look down to 1310 or so. And if you look on the daily chart, 1310 is the point of control for the entire year. So that's something that's worth noting. So it's going to be dependent upon how much pressure there is as far as the selling pressure in the market. Like I would say, I would look for a potential trade here to the long side. You'd be looking for a bounce back up towards the 385 level, basically to retest this ceiling, and you want to be a seller into that strength. Now, you want, in my opinion, I like to sell into strength, and I accept the fact that I can always buy back in if I want to. But if it hits my target and it's still going, it's on an up bar pretty much, I'm okay with that because I'm always okay with risking, taking profits and then risking some of those profits to see more upside, however I want to get involved. But I don't like it when I'm long and, I'm keeping well, depending on your time frame, but you're keeping a trailing stop, and it hits your target, fails, and that was kind of it, and you end up making less money than what you potentially could. So it's really dependent on what type of trader you are. Do you like to trail your stops, or do you like to get out once your target's hit? It's also appropriate to keep in mind, what are the bigger time frame market players doing? Is this move from a big price level? And in my opinion, no, it's not. Look at the volume we've had in this range, generally speaking, and then compared to the volume under it. There's so much more volume at 1350 to let's call it 1300, than there is at current price levels. So I wouldn't have huge expectations on this move down. Even if it's 75 S&P points, you're coming down to a market that should be supported by these levels. One, you kind of see like some trend line support potential, but what's more important to me is this volume. And you're either going to see it basically right here, right now, on this shorter time frame, or you're going to see it at the bigger time frame, and you're going to be looking at this 1340 to 1308 level, 1310, 1300, whatever, as potential levels to trade off of. So I hope that kind of helps and clears it up. Now what I want to do is go over these sectors so you can get an idea of what's going on. So I'm just going to go through them pretty quick. Financials, you want to look to be a buyer at 15 or between 15 and 1460 on the XLF. Really from there, I wouldn't, I wouldn't be buying this semi-weakness. Wait for the right pullback, and it's probably more like the 50-day moving average. On a monthly chart, 1473 is the point of control. It's also the point of control for let's see, February. So just something to keep in mind. XLE kind of rolling over. You're at the 200 here. Keep in mind, futures are going to be open lower. So really, you could be looking to buy the bottom of the value area for the year, or a potential trade down to that level, about 65 or so. On the monthly chart, here we are at the bottom of the range. This 7170 to, let's call it 70 level matters. And if we start to fail like that, and I'm assuming we will, just based on how the market reacted to jobs, you're going to see lower prices. Maybe look down to 69 as your first potential target. That was December's point of control. And then down to the 66 area, 65. Utilities, it's bouncing at the top end of the range. If this breaks lower, you would look back down to about 33 or so. If we stay in this range, then it's really, in my opinion, okay, as long as we don't really start to go below the 200. Industrials, we're at the top end of the range here. It's, I would recommend to be careful. 35.30, let's call it 35.25 on the XLI. That's a potential level. Look at the nice volume there. But you have to look at these recent swing lows also. Let's call it 36 on XLI, and that's another level to watch out for. And if it gets low enough, the 200 and 150-day moving averages around 34, that holds some volume too. It was the resistance until we broke out, and could be support again. So, and keep in mind, remember, overall, you want to be a buyer. As far as a very long-term view, you want to be a buyer of the market. It's short moves to the downside are short-lived, in context, and you could see a 10-year rally to the upside, but a 6-month or a 1-year downtime. So the relationship, as far as being long or short, sure, you can play it to the short side. That's fine. A lot of people do. A lot of people make money. Then a lot of people lose money. But the point is, overall, you want to be looking at value in the market, and eventually, you kind of hope that prices get beat up a little bit so you can be a buyer. Metals and mining. This is getting crushed, and this is breaking off from what should be support. It's failing from the 200-day moving average. Point of control for the year at the top end of the range, of this range. And what are we getting from there? Well, we're getting a breakdown, top of the range to the bottom of the range. Now we're looking for a breakdown, and it will on Monday. And if it doesn't quickly recapture the 48 level and push up towards the top of the range, then you look down to 40 as a potential target. That's a pretty big move, and it's worth it's worth a potential shot to the short side. Now I'd be careful, and you'd much rather be selling at the top end of the range than at the bottom expecting a breakout, because commonly breakouts tend to be fake outs, and you find yourself holding a trade that you should have just sat on the sidelines for. Healthcare, this is definitely an uptrend breaking out, so that's good. As far as potential targets, you hope it gets beat down to the 50-day moving average where you can look to be a buyer around, let's call it around $36.40. And then from there, the 1-year point of control at 35.70 or so. That's a good place to get involved. And really, this is just, I don't think this is the end of the uptrend for healthcare. You can see on the 90-day, if we hold March's point of control at 37.15 or so, that's great. But if not, your target, that 36.40 level, down to 35.70. All right, gold. Now this is, the gold market was closed on Friday, so we don't know how it's going to react to the jobs number. Just keep in mind there's two ways to think of this. One, people are going to start hoarding cash again. Or two, people are going to start pricing in the potential for QE3 just because a missed jobs number. So really what you want to look at is if we hold 1600, then everything's good and we should press back up towards 1670. If not, we're going to drop down to 1550 to potentially 1500, just below that. And just keep in mind the lows for the year, the very end of 2011, 1525 or so. Crude oil. Looks like I have some drawings here that are irrelevant now. Coming down to the point of control for the year, I don't think you take your eye off this ball just because it's having a breakdown. I don't think this is the end for crude oil going up. So what you're seeing here, and let me zoom out so we can redo that. Failing from the point of control for February. But you can see, let me get the right tool. Sure, we broke down from these levels, but the major amount of volume is not in that level. It's down the lower end of the range, around 100. I have the major brackets marked off. You can see. You can see the huge high volume here. And you can see price came right down to it. Every time price retreated to this high volume, it traded straight back down to the lower high volume area. And as much as I keep kind of pounding the table on this right now, I'm just trying to be as honest as I can and show you that this works and you can apply this to your trading and make a good living out of it. So really, did I get my point across with oil? Look to be a buyer on this weakness. And, anywhere from 98 to 102, you just have to look for the bounce. One thing to just put in mind is you do have good selling volume here on hourly bars, but you need to look at the overall trend. The overall trend really in a range. We haven't made a new 52-week high. But you have so much volume down here that it's probably good at least for a retest of 107 or so. Alright, we got to go over the 10-year and the 30-year because you can't take your eye off this ball either. Basically a double bottom. You hit the bottom of the range, trading right back up. I thought these would be topping out because you had the majority of the volume up here. Now you did get a nice trade to the downside, but what was it, 4 or 5 days long? It wasn't that big of a deal, and now you're just getting a big march higher. This big bar is including the jobs number, so that's just something to be aware of. The 30-year looks like it wants to go retest this point of control. We'll see what it does when it gets there, but this is a pretty nice reversal from now off of a very defined level. Look at the volume between where we have bounced and down to, call it 126. There's nothing. It would slice through this volume as far as price. So that's just something to be aware of. I'm also going to do 3 names three names that I think are at good opportunities. Medifast. If this gets beaten down Monday, take the opportunity and buy it. It was up 6% on Friday. It's breaking out from this range. There's no volume up here. You have a little bit at, say, $20, and then from there you can kind of look up from 22 really to 24. And this is. Do you really think this is the high for this? It's hard for me to believe that. One, not only because of the chart, it has the 13 PE, 52% growth rate, and it has a short ratio of 12 days to cover. So that's pretty. That could give this some juice to the upside. And don't let this opportunity, just because it was up 6% on Friday, take your eye off the ball. I kind of keep your stop back below the 50 and 200 day, somewhere around 1650. So yes, you're risking some, but your expectations are pretty high. So just keep that in mind. Agrium, maybe a name that you want to catch on any weakness that the market sells off here. 9 PE, 34% growth rate. The return on equity is 26%, and they have cash flow of $12.03. So, I mean, really sound fundamental company, and it's agriculture. This business isn't going away. You would hope for a pullback down towards 80, but maybe the 50-day or 83 is where you got to start. CVR Partners. This is one that I started to accumulate. You have to watch for your fills, just like on MED. It's the volume in these stocks are fairly light, so just be careful on your fills. Don't just go to market, put in a limit order. But UAN, which is CVR Partners, 14 PE, 34% growth rate. $2.17 of cash flow, and they have an 8.6% dividend yield. So it's pretty impressive, and on top of that, a 31% return on equity. So don't take your eye off of this. This could easily touch 32 and continue higher. This is one of those investments, not necessarily a trade. Same goes with Agrium and Medifast. I mean, these could be trade or trades, investments, whatever, that you hold for 6 months to 18 months. You never know. You just kind of let it go and do what it's going to do. So really, that's it. I hope this gives you a broad-based idea of what I'm looking at in the market, which reminds me I need to cover technology. This is one that's still strong, but we're going to get a pullback here. 29, actually, if I remember right, the futures on, let me pull it up just to show you. On the S&P or the NASDAQ, it barely made a new low compared to the recent lows, whereas S&P completely broke down. So just something to be aware of. Everything's still good with technology, really. So take care, have a good evening, have a happy Easter. Talk to you Monday.